Taxes, everybody has got an opinion and everyone's uncle has an expert loophole. But here is the truth. A lot of what people think they know about taxes cost them real money. I am Aradhana Aggarwal. I am a CPA and my goal is simple: to help everyday people understand taxes without fear, confusion, or jargon. And today we are busting the top tax myths that are draining people's wallet. We'll separate facts from fiction with just enough humor to get you through tax season without screaming into a folder of receipts. Let's start with my favorite myth. If I don't file my taxes, maybe the IRS will forget about me. Fact, they would not. The IRS remembers everything. They get copies of your dues, 1099s, brokerage forms, all before you even open TurboTax. Ignoring your taxes does not make them disappear. It just adds late filing penalties, 5% per month up to 25%. Failure to pay penalties, interest, and IRS interest grows faster than your favorite stock. Even if you can't pay right away, file your return. There are payment plans, options for hardships, and even compromise programs. But nothing good ever starts with avoidance. I get it. Tax refunds feel great, but let's be real. A big refund does not mean you won. It means you loaned the government your money tax-free all year. If you consistently get huge refunds, you are likely over withholding. That's your cash money that could have been earning interest, paying bills, or building your businesses. Adjust your W-4 or self-employment estimated taxes so you keep more during the year end. Oh, that old cash doesn't count myth. Popular among lawn mowers, babysitters, and that one guy at the farmer's market who doesn't do receipts. Here is the truth. All income is taxable unless the IRS says otherwise. No exception for being old school. Cash is reportable. Freelance payments under the 1099 threshold still taxable. The IRS calls this the underground economy. I call it the easiest way to get audited if you brag on social media. Real talk. The IRS has data matching software and algorithms. Even without a 1099, trends in your expenses versus reported income can trigger scrutiny. If it hits your wallet, it's income. Pay the taxes, sleep peacefully, and keep those side hustles legit. I love my job, but I'm not a magician. I can't undo 3 years of unfiled taxes, missing receipts, and business transactions mixed with dog grooming and Amazon shopping sprees. Yes, we can help clean things up, but prevention beats correction every single time. When you procrastinate on taxes, you lose out on accurate deductions, clean financial records, strategic planning for future savings. Treat your CPA like your financial partner. The next one, the legendary home office deduction fear. Somewhere out there, someone told hardworking people that deducting their workspace will get them audited. Let's set the record straight. That's outdated and false. The IRS actively encourages correct expense reporting. You just have to follow the rules. Space must be used exclusively and regularly for business. Deduct a percentage of utilities, internet, rent, and depreciation. Keep your square feet calculations and photos for documentation. Or use the simplified method if you're nervous, $5 per square foot up to 300 square feet. Take the deduction you earned. A clean home office deduction does not cause audit. Sloppy bookkeeping does. Side hustle money might feel like small fries, but the IRS still wants their share of your fries. Once you earn over $400 in net profit from self-employment in a year, you owe self-employment taxes, which is 15.3% for Social Security and Medicare on top of your income tax. Many side hustlers skip this part and then get hit with penalties later. My advice, even if your business is part-time, treat it full-time for record keeping. Track income, expenses, mileage, and separate your accounts early. Because when that small gig turns into your main income, you will already be IRS ready. I love entrepreneurs, but sometimes you guys get creative creative. I have heard my vacation was for business inspiration. My dog is my emotional support intern. That yacht lunch was networking. Look, the IRS isn't buying it. To be deductible, an expense must be ordinary and necessary, meaning is common and helpful in your line of work. So yes, your work laptop, professional tools, and business travel, yes. Your weekly spa strategy meetings, no. Stretch the definition and you could end up stretching your lap. Remember, smart deductions are strategic. Wild deductions are red flags. Save money the right way. A good CPA does tax strategy, not just forms. A good CPA can help you plan, project, and save all year long legally. Smart people don't wait until tax season, they plan before it starts. Believing tax myths can cost you money, stress, and opportunities. Don't rely on social media myths or hearsay, rely on facts and planning. The secret to paying fewer taxes isn't about loopholes, it's about strategy. Thanks for watching. See you next time. And don't forget to like and subscribe for more tax tips that are legal, practical, and intentional.